If you're considering buying a home next year, there are a few things you might want to consider. KTVO's Manisha Bruner has the story.
Don't shut the gate just yet. If you are planning on buying a home in 2014, some things have changed now that the government has issued new mortgage lending rules.
Truly, it's to protect the consumers overall more than anything.
The rules introduced by the Consumer Financial Protection Bureau basically protects borrowers from many of the abusive lending practices that were widespread before the housing crisis. Banks and other lenders now have to make sure you have the ability to pay your mortgage before taking down the for sale sign.
The good news is that hopefully, with a lot of cases, it protects the consumer so that they're not going to have huge rate hikes in their mortgages or things like negative amortization loans where they're paying less than the actual interest accrued. Now, we've never done that, but some banks did, and so consumers needed to be protected from those things.
Jackson says consumers may get aggravated at the amount of paperwork they now have to fill out.
Very strict guidelines on debt to income. All payments must be considered, whether it's mortgages or any credit whatsoever. Their debts must be considered, and their income must be considered. And so that also, of course, is hard on self-employed people. What they report on the tax return matters. So that makes it more difficult for some people.
To be a qualified mortgage, a lender can't make loans with balloon payments, terms longer than 30 years, or structures where the principal balance increases. Reported in Kirksville, Manisha Bruner, KTVO News.
Also, with these new rules, a borrower's total debt burden can't exceed 43% of their income.